Let's take a look at some moon targets for Tezos from the Bull Run TA article on Brave New Coin. So I've done this with many coins at this point. Of all the coins that I think this is a realistic possibility, Tezos and Link are high on that list. Link is going to be next week, I think. But the general gist of it is, as we enter price discovery, as we enter new all-time highs, specifically for Kraken, not necessarily on other exchanges like HitBTC, which I think has some older price data that I just didn't include. I don't know how relevant it is in general, just to be honest with you. But looking at Tezos, in that it's very close to a new all-time high, as a trader, it's always good to check your bias, check your long-term bias, check your short-term bias, try to balance it out. The worst thing that you want to happen is to start panicking when we're going up or going down, whether you're in the position or out of the position, whether you're long or short. You always want to know, it's like driving. You always want to know where your blind spots are. You always want to know where you should be looking for support and resistance. You know, what is my out if a car in the oncoming lane starts to come after me, right? What is my out if this starts to look bearish? What are some likely targets here? So looking at all these coins, using the same parameters, 1618, pivot extension, yearly pivots, moving average multipliers, pitchforks, that sort of thing, we start to get these high time frame targets. So this is fib extensions. In general, you pick a high, you pick a low. Typically they are extreme highs or extreme lows, and that gives you a 1618 extension, gives you a 2618, and so on and so on and so on. Typically the altcoins, Ethereum specifically, loves to reach for the 2618 to the downside, to the upside. It generally tends to outperform the 1618. So when it's bearish, it's super bearish. When it's bullish, it's super bullish. I have a feeling Tezos is similar in that regard because 80% of the network is being staked currently, which means this isn't liquidity on an order book. Now, is it easy for a user to remove that stake, send it to an exchange, and put it on the order book? Yes, but this takes time. So that means slowly, if things start to creep up, not a lot of people are always paying attention to this sort of thing. So the order book tends to be not stacked on the ask side, for example. Just one reason to think about Tezos in a little bit of a different mindset than some of these other coins, because so much of it has a job in that it's being staked. Now the same goes for the downside. You know, if this starts crumbling, there might not be a lot of bid support here. It's a little bit different on the spot side because you can always buy with USD or USDT or whatever. So just something to consider. So we have the 1618, the 2618. You can see this recent, if we just pick this high, this low, just any random one, all-time high, relative low, he gave us this 1618. We shot a little bit above it, but then we crashed back down, and we actually briefly retested it, 280 level, on the most recent high. We haven't quite hit the 2618, so that'd be the level I'd be looking for on this next all-time high. I think it's around 430. Past 430, you have the 1618 of this range, which is around 5, and then you have the 2618 around 750. So these are all levels just to watch, to put on your chart, to say, hey, there's probably going to be some acknowledgement of this level at this price point in the future if we have bullish continuation. One example I just like to show is for chart patterns, you have a range. This is specifically called an ascending triangle, but you have a range, you put in a high, you put in a low, and you fib that out, gives you a 1618, you add a measured move, extended upward in this case, and it gives you a range of price expectation. So if we look at, again, back to this, the expectation is if we break this high, we're at least going to hit 5. Knowing that the 2618 is at 430, that gives us a range between 430 and 5 as far as the next move beyond the all-time high. Now, even though there's no price history to compare, there's no volume, there's nothing to compare other than just the previous ranges. If we shift gears to the pivot points, which are mathematically based on the prior period, prior selected period, I like the yearly. They're printed January 1st based on the previous year. Now there's some issues with this on Kraken because there's not a lot of data here, so really the 2020 pivots make a lot more sense than the 2019 pivots just because there was less data. But as this stuff gets older and traded and there's more data, it's easier to take these pivots seriously. But So the 2020 pivot's printed January 1st, right? January 1st price was here. Where did we go? We went up the ladder, R1, R2, R3, all the way to this, put in some high, then we revisited the pivot open from January 1st. Again, I just treat these as levels to acknowledge for support and resistance. If we are bull divving on a yearly pivot, wasn't a bull div here, but if we were, then you can say, okay, there's probably a reasonable degree of certainty, probability that we're going to find support on this level. Another way to read that is if we don't support here, if we don't resist here, we're going to go way higher, we're going to go way lower. Very similar here. Now this closed at $1.30 on the day, but it actually went, I think, below $1 or to $1 exactly. So it bounced, it pierced this pivot and then supported. Hey, look, guess where we stopped? Here at the R2. So this says if we get done consolidating and move higher, we're probably breaking the R2 to the next yearly pivot, which is just happens to be this previous high. So again, it's like a ladder. We climb it, we fall below it. If we're in free fall, they're levels to watch. And I always like to point out the yearly pivots. This is Bitcoin, 2018 yearly pivot, printed on January 1st, almost perfectly predicted a low. So if you told me at all-time high levels that we were going to hit 3K by the end of the year, I would have said you're crazy, right? But this gives you levels to watch. Even when we're seemingly in no man's land, it helps erase your bias. And again, it's a ladder. If we keep climbing the ladder, it says we're super bullish, right? Breaking resistances over and over and over. We break up, we fall back to support. We keep breaking up, we fall back to support. And it goes on and on and on. You'll see pivots condense when the previous year has low volatility. You'll see pivots expand when the previous year has high volatility. Another thing to note is that if we break the R5, the odds are pretty high that we're in moon bounce territory, right? Like just mega moonshot. Similar to 2017, we broke the R5, mega moonshot beyond that. Now mathematically you can figure out R6, R7, R10, R25, whatever. But we rarely breach R5 or S5 or whatever the supports may be. This next one is a moving average multiplier. So this is the 2-year moving average, which admittedly for this data set may not have enough data, but it actually looks pretty good. It doesn't tell you anything about 2018, 2019, at least early 2019, but it does tell you there was a low here, there was a low here, there was a low here, and there was a high here, there was a high here. So there's a few ways to play this. You can either say, okay, it's breaching below the 2-year MA. I'm going to either dollar cost average into a position, no matter what, as it's below the 2-year MA. And then once it's above the 2-year MA, I can stop dollar cost averaging and just start dollar cost averaging out once it reaches 4 or near or above the 2-year MA. 5 times the 2-year MA in this specific case. So this red line is just 5 times the 2-year MA. Typically what you want to see is, okay, we drop below it and then we drop above it. This confirms the trend, right? So again, you can say get ready in this zone and then go when we break above it. Get ready when we're in this zone, go when we break above it. So the expectation now is that we reach for this $6 2-year MA multiplier. You can also think of this as an oscillator. So price likes to live in this median zone. This is overbought territory. This is oversold territory. So you can say, I'm going to start getting out of a position on a long-term scale if we're way above this 2-year level or start to get above this 2-year level. I'm going to start buying when we're below this support level. Because this says it's oversold based on 760 or 30, whatever MA that is. It just happens to be the 2-year. This is Tesla. I just like to show like random stuff just to say it's like, TA doesn't work, right? But in a vacuum on any chart, if this system is worth anything, it should be applicable, right? So again, this is the 2-year MA. It catches the lows here. It tells you when to buy. It tells you when to sell, right? And if it's way above the 2-year MA, the multiplier of the MA, you can say, okay, I should start thinking about selling. When it drops below it, you can say, okay, I'm selling now. Well, whatever you want to play this, dollar cost average out, start shorting when it drops below, whatever. So even though Tesla entered price discovery above 380, above 400 at the beginning of the year, the MA multiplier caught that top in this case. You know, clearly you can go way above it, right? But in this specific case, it looks pretty good. You know, it catches this top just by multiplying whatever the 2-year MA was. There's an Adam and Eve here, so there's all sorts of stuff that looks really good for upside. But to predict some random target is very hard to do in price discovery. It's just one reason I really like this metric. Then lastly, just using a pitchfork, you just pick 3 points. The anchor is a extreme high or extreme low, and then 2 more points here. It's pointing up, so we know it's a bullish pitchfork. In general, if it's real, you want to see certain levels respected. You want to see price returning to this median line several times or treating it as severe support and resistance, which it did here. You want to see the wings, outer diagonals, whatever you want to call them, as support and resistance, right? So I had to add extra wings on this to say, okay, this is support here. On the flip side, we can say 16 plus is actually the ultimate resistance on the way up. So I don't know what it is today. It's above 255, I'm pretty sure. But $6 plus, this median line is where it wants to go. It wants to go back to the projected average of the trend. So $6 not unreasonable. That would be price discovery. 16 plus, not even that unreasonable. Sounds absurd to say out loud. The market cap would be whatever it would be. This is just in a vacuum, technicals, what they're projecting. So adding all this stuff together, you can put on pivots, you can put on the MA multiplier, which also likes 6. And if it's a multi-year, multi-week, multi-month trend, you know, this MA multiplier is going to start moving up like it did here. These pitchfork levels are going to start moving up. So together just gives you a picture of what's possible beyond the all-time high in price currently.